Good morning, guys. How are we all doing? Hope we all had a great weekend. Obviously, it was a bank holiday in England, in Great Britain, in the UK yesterday. So yeah, here we are today. I am Dan from Trading with Dan. This is our Bitcoin update. Not quite in the morning either, but this is our Bitcoin update. So yeah, that all being said, we shall go straight over to those Bitcoin 4-hour chart. So yes, Bitcoin on the 4-hour, we had a nice little pump up, probably probably off Michael Saylor buying his 301 bitcoins to add to his stack. I think he got about 4 billion, nearly $4 billion worth of Bitcoin, and I think he added 6 million. So not a lot, but hey. Yeah. So anyway, we had a bit of a bounce here off this level that we've been at a few times. We are currently we did currently backtest the underside of the resistance, and we got resisted there. So yeah, can we get a pullback to some of the range of this move up and then try and break through? Yeah, we certainly could. Or does it look particularly bearish if we come back down to these lows, take them out again? Then we have got to be looking for new lows for this move, taking out 17.5k and then potentially coming down towards 16.5k. Obviously we have a big catalyst tomorrow with the FOMC. Yeah, so I mean there is about a 20% chance of 100 basis point. See, we're all conditioned to say basis points now. A 1% raise. A 1% raise, or 100 basis points, as we all like to say as finance professionals in inverted commas. But yeah, so that does mean that the market is pricing in a 20% chance of that happening. So if it doesn't happen, obviously there's scope for the market to rally then, because that 20%, if it doesn't happen, can be factored out of the market because it wouldn't have happened, so it would be 0%. So yeah, we could get a bit of a rally of 75%, but basically it's not necessarily going to be anything wild. It kind of will depend on what the Fed says going forwards. But yeah, things just generally looking not that great down here, are they? If we have a look at stocks as well, they came into a resistance level, didn't even test the underside of the more important resistance level, but yeah, rejected, coming back down. I mean, if this takes out these lows, I mean, yeah, we are going to be looking at we take out this low. I mean, the next level realistically is the support of the recent low. We've come and hit that. Then yeah, all bets are off. We pretty much have an air pocket in the market. Let's put this on a daily. We pretty much have, if we take out this support, I mean, realistically, there's not a lot of support. Well, there's not a lot of support into this until around the 33s, 32s. This kind of area, or order block, or whatever you want to call it, around here. This area here could offer good support. There's tentative support levels we can bounce off in this level, but realistically we'll be looking at coming into this price action range, and then seeing what happens at that level. I've seen a lot of finance professionals, prop firms, actual firms that trade, talking about 3,600 they think is about fair value for the S&P. So if we get to like about 36, the buying will commence, the averaging in. They obviously won't shoot their loads in one shot. But yeah, so around 36. So I expect obviously it to be a grind over time down if we are to get into the 33 or 32s. But yeah, I mean, people will be looking at the risk reward trade of around basically 3,600 and below, just for obviously long-term positions or investments. But we are talking about finance 1.0, so they are actually technically investments and long-term positions. So yeah, but as we speak, back to the 4-hour, not looking ideal. We need to not take out these lows. We need to then take out these highs and then come and test into this resistance and get back above. Let's have a look at some of the other bad charts to look at. I mean, yeah, the DXY. I mean, this is fully unacceptable. It's fully unacceptable to expect to have the exorbitant privilege of the world reserve currency and then think you can just starve the whole world of liquidity, vis-a-vis letting that currency just go to the moon. It's just not acceptable behavior. It literally is economic warfare on lots of other nations, lots of people, lots of people's asset prices. It's just full on warfare against us all. It is basically disgusting. You can probably tell how much this annoys the living crap out of me. Yeah, it's just BS. They cannot be basically reducing the amount of dollars in the world, because we live in basically a Ponzi scheme because of this monetary system that they are basically the head of. So if you then, I mean, you're literally causing the bust. You're causing a massive bust by removing liquidity from a Ponzi scheme, and you're just going to cause lots of problems. So yeah, I mean, that is that, isn't it? People got to find another currency to transact in, or we've got to move away from the dollar if they're not going to basically have liquidity in the system. The 10-year, disgusting, just bad. This isn't as bad as the dollar, but yeah, this isn't bad as DXY, the current value of the dollar. This is obviously the forward value. But look at it move. It's taken out of these highs now. We were looking good for a breakdown and being at the end of this BS, and then it was literally a very orderly rise upwards, and now we've taken out this high. So I mean, we're in. I mean, the Federal Reserve, I personally think there is absolutely zero chance of a 100 basis point hike, because these markets are so close to crashing, like literally crashing. Like I said, these markets are so close to S&P finding itself around 3300s. And if you look at the context of where we've come, I mean, that isn't even spectacularly low compared to how far we have come. So yeah, I mean, we're in full on crash zone. So I think there's zero chance of 100 basis points. So if they do, then we are literally opening up a high likelihood of this. And then the stock market crashing into the midterms. I mean, nobody's going to be happy. You've got interest rates going up, screwing everybody. You've got the problems with the dollar. I mean, that's obviously a lot of problems for the rest of the world. Obviously, it's helping America buy the stuff it needs with the stronger dollar when things are going up in price to a certain extent. And then yeah, if you crash stock markets, it's just not a good scenario. It's not looking good, guys. Yeah, so like I said, if we do get 75, imagine if we got 50, imagine said we do 50 now, 50 next one, and spread out 100 over the two. Imagine, that would be great, but I mean, we'll have to see what happens. I mean, basically the unemployment figures, whilst they are basically a scam, it's the labour force participation rate that you need to look at. And if you take into account the people that are excluded because of the excluded from the actual jobs numbers, in the actual jobs rate is around 10% in America. The actual unemployment rate is around 10% of the people of like the working age. So it is a dire situation out there for that. Yeah. What else? What else can we look at? Gold, obviously, not particularly enjoying itself. Silver did have a bit of a bounce, funnily enough. But yeah, nothing that erases the downtrend that we've got going at the moment. I mean, we could probably draw a nice channel in here for silver that at some point will most likely break to the upside. It's just a case of how far do we walk down pretty much in the meantime. So yeah, there's a descending channel for silver for us to keep an eye on. What else do you want to look at? Oil, yeah, we look at oil normally. That is not indicating anything particularly great. Hovering above this last final level of support. I mean, basically at this level, which is where we've almost wicked down to, is where not the Fed, but the American government has literally said that they're going to start buying. Therefore, there's a lot of support at $80 a barrel. So realistically, this is a great risk-reward trade now just to go long this. But obviously, there's all the whole recession worries. I mean, it's going to struggle to make much room. So, I mean, this just could be pinned now between like 80 and pretty much 90 in the $10 range, even though we've had a wild volatility in oil. I mean, and still $10 range is still wild volatility historically. But yeah, not for what we've recently had. We could just be pinned around here now because it wants to come lower, but there's always the American government that is going to be buying or claims they're going to be buying around $80, and I guess they are. I mean, they sold some, they need to stock it back up again. So yeah, Let's look at stochastics. I'm sure there's going to be not much to cheer about here. Even 4 hour looking like it wants to roll over here. 10 hour pointing up. 12 hour turning up from a low level though. 12 hour could be our friend. Daily looking to try and turn up. Buy daily though has freshly turned down. 3 day pointing up. 5 day looking to try and turn up. Weekly pointing down. Bi-weekly pretty much pointing down, but at a very low level. Gonna struggle to stay down there, as is the nature of stochastic charts, and then monthly still coming down as well. But yeah, ultimately we are waiting for the Fed tomorrow. Like I said, I mean, it's got to almost certainly be 75 basis points, or because the consequences, if they're not, are pretty dire. That could be, depending on where price action is at that point, could get us back above 20,000. It could maybe not look so bad. It could help. It could get stock markets basically back up towards its $4,000 level. But yeah, we're asking a lot here. We are not looking good. Like I said, these markets are literally there's got to be people worried about these markets crashing at any point. So the Fed's got to be looking at that possibility as well. So I just don't see that they can basically nuke the market with 100 basis points, even though there's a 20% chance factored in. That means there's an 80% chance it isn't. So I had some quick math there. I didn't even need to get my calculator out, but yeah, there we go, guys. We'll have to see basically what happens tomorrow. But yeah, that is it. This is not financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.